If I were to summarise in a sentence or two what happened, then I'd probably say that results in general were pretty solid considering economic conditions, but if you were handing out Olympic medals for results, the real economy would certainly be a lot lower on the podium than the financial economy. So certainly the gold medals going to the financial economy, and those results tended to be pretty solid. If I were to look for ways to summarise it, CBA always have a bunch of really good slides on what's going on, and we always find it quite interesting just because the spending of a very large part of the economy tells you a lot more about what's really going on than generally the broad economic statistics. So if I were to focus here on a couple of slides, I'd probably say that the blunt impact of interest rates is and continues to be one of the biggest issues for the Australian economy. You can see there on the left, housing continues to be the biggest part of the CPI problems. We still have a situation where we've got a lot of immigration. We've got housing starts that are actually almost at trough levels of the last 20 or 30 years, and certainly relative to population they are. So you're getting a lot of tension in the housing market, and that's proving very difficult to allay inflation fears. The difficulty with interest rates, though, continues to be that all of that pressure is being thrust onto the younger generation, and you can see that in the spending slides there, that the younger cohorts are generally very weak. The older part of the population still spending very strongly, and obviously as interest rates tends to pass money from the younger borrowers to the older generation, that wealth transfer is continuing to have a big impact on the economy. So that would, for us, be a pretty interesting part of results. If I were to move on and say, okay, the one thing that we would have been surprised about was probably the strength of retailing was again, showed probably that we do have a bunch of really good retailers in this country. JB Hi-Fi, I think, as an example, continues year after year to produce pretty creditable results. And again, I'd probably point to the strength in the back end of the year as perhaps being a little bit surprising. So arguably we've been through the worst. It does look like interest rates are probably flat, perhaps easing over the next 6 to 12 months. That's meaning that confidence actually isn't too bad at all in the economy. So you're seeing there both in Australia and New Zealand for JB Hi-Fi, the back end of the financial year proved to be pretty strong. And in a business like Super Retail, you also had some quite material differences in categories. So some categories holding up much better than other. Things like apparel probably a little bit weaker than some other areas, where the Bunnings of the world and the BCFs, as you see there, are continuing to be pretty solid. So retail probably, again, a pretty good part of results season. If I were to dig a little bit deeper, and again, I'm borrowing a lot of here from CBA's slides, but a few of the perhaps more esoteric points that I thought were interesting were just that one of the reasons for bank result strength is just that we continue to have almost no bad debts in the economy. So despite interest rate rises, house prices have sailed through, as that chart on the bottom right shows you. And when house prices are rising, banks almost can't lose money on housing loans. And that is a real conundrum. On the other side, though, you're saying, well, nearly all of the borrowers who can get a loan are in the relatively high income category. Just about everyone else is totally crowded out of the borrowing market. And even then, as that vintage chart on the bottom left shows you, the recent cohorts, being 2023 and 24, are actually in the most mortgage stress. So the people who've only just started borrowing money are already getting into trouble. And that, to me, is a pretty worrying sign, and it just does highlight to you how big a problem housing and the cost of housing is in this country, and to us it still overwhelms just about everything else. So that's probably a bit of an encapsulation of what has gone on, where again we'd say the real economy probably is doing it tough, And that goes back to that concentration theme where just more and more of the stock market is really crammed into a narrow area like financials. Banks have done really well in the past 12 months. So that's something that we think for market health, you really need that real economy to start broadening out and to get more sectors that are contributing to the longer term growth.